Americans return to space as Discovery clears the tower.
YouTube, welcome back. TTMTrades, man. Today I want to talk about, man, honestly, my past 2 to 3 trades and why it's important for you to have a trading setup, right? Something, a trading setup is what tells you to go into the market and what tells you to come out of the market, when to make an entry and when to make an exit, okay? And literally my past 2 to 3 trades, I've nailed them perfectly, followed my trade setup, and literally each time I follow my trade setup on the entry going in, and then I don't follow my trade setup on the exit to come out and take profit. And I've literally shortchanged myself over the past 2 to 3 trades, probably a little over 200 to 300%. And 300% is minimum, because I haven't been following my trade signals. I don't know why. Maybe I need to take a break from trading for like a week or a couple of days, but I think I just been doubting my own setups, as far as taking the exit. So I don't know what it is. Maybe it's a psychological thing. I probably just need to take a break from trading for 2 days. Maybe it's because, I'm trying to do multiple things at one time, and I'm not really 100% focused on the trading piece as of lately because I've been doing a lot of things. I don't know what it is, but what I'm gonna do is I want to show you the 2 to 3 trades that I made and how I allowed myself to get faked out of those trades, even though my trade setup was telling me the overall setup is still good and to stay in the trade. All right, so first thing we're gonna look at is we already talked about the Uber trade that I allowed myself to get faked out of. So I got faked out of the Uber trade, and I just recently got faked out of 2 more trades. All right, so we're gonna look at this April 7th. This April 7th, 267 strike price put I bought on SPY when it gapped up that morning, and I bought it first thing that morning at 9:42. I took a small entry at 9:35 at 2:09, and then once I got confirmation that the setup was intact, I took another, nice, added more to the position size at 9:42 about 7 minutes later, as you can see here. But April 9th, 267 puts, the market gaps up, and I'm gonna go over my trade setup when I took it and why I took it. Okay. Now, looking at the overall market, and the market is still going, so you may see the ticker move a little bit over here. But I was looking at the weekly chart, and I knew we had a strong line of resistance sitting right around 270 to 275 at that time, where the lower Bollinger Band, 1 standard deviation, was at on the weekly chart. So going to the 5-minute chart, because that's what I've really been trading. I've been looking at the bigger trends as far as the 30-minute, and then I've been utilizing the 5-minute chart to pinpoint my entries and exits. Okay, so with that being said, April 7th, 9 in that morning, as we said, 9:40, 9:35 that morning, April 7th, I took puts with a strike price of 267. All right, so literally that morning the market gapped up to 275, and I realized it gapped up right into resistance on the weekly chart. So what I wanted to do is I wanted to take puts right at that resistance, and it wasn't a long-term play. It was going to be more or less a short-term play, make a quick 50 to 80% return and cash out. Okay, so I literally took puts right on this candle right here when the market gapped up. Okay, I took puts again. Remember, the market rallied up like this again, and then when it began to fade out, I took more puts on that fade out right here, which gave me my total amount of puts. I think it was 15 total, 15 puts, with an average price right around 209, 247. So give or take probably about 245. Okay, no, it was 242. That was my average on those 15 puts. Okay, made my entry here. All right, so I knew the gap up was gapping up right into resistance. At that time, we was oversold on the 5-minute chart, and then on the 30-minute chart, we was also oversold. Let me bring up the tools on the 30-minute chart. We was also oversold on the 30-minute chart. So not only was we pushing into resistance, on the weekly chart, but we were oversold on the 30-minute chart and the 5-minute chart. So this is a great time for me to try and take puts. So I took puts with an average of $2.42. So the market immediately began to reverse. Mind you, the PMO, which I used to identify the overall trend, did gap up to reflect that gap up, but I knew it was going to immediately fade due to the overall oversold status of the RSI and us pushing into that resistance. So what I really wanted to see was a confirmation of the crossover of the PMO to show that the trend was beginning to fade away. All right. So as the trend begins to fade, coming down to here to the middle Bollinger Band, I think the puts go from 242 to right around 450. I know I'm up right around 70% right in this area. Okay, so I begin to see the market rally back up like this, and I'm watching to see if it breaks above this 1 standard deviation Bollinger Band. Mind you, we're on a 5-minute chart. The price action begins to pull back. I'm looking at the PMO. I'm noticing that it's fully crossed over and it's trending downward and it's falling below its averages. So these are all good signs right here. Okay. As it pushes up into that 1 standard deviation Bollinger Band, it pulls back, and then when it gaps up like this for one last push, I think I was right even. I think my puts they went from being worth 242 and I sold them. I closed out those puts at 233. So they was worth 242 average between that 209 buy and that 247. They was worth 242. When it pushed up like that, they were at 243. So I was in the hole maybe $33, but just to protect my account, I went ahead and closed out this position when it pushed up like this. All right, now mind you, if I would have continued to follow my setup, right, because the PMO, again, I've smoothed it all the way out to ignore these minor moves like this and just to overall stick with the trend, I would have noticed that the PMO was still below its short-term average, and it did not break above that yellow line, and we were still trending downward regardless. Okay, so if I would have continued to follow my trade setup as far as the PMO, then I would have caught the rest of this wave down right here before market closed, as you can see, all the way down to that 30-minute chart middle BB, which is the 150 SMA you see sitting right here. And by the end of the day close, those puts that I bought that morning with an average price of 242, they were worth right around $5.98 to $6. So I could have easily closed that out for 100 to 110% gain, but I allowed myself to get shaken out of my position, not following my overall PMO setup, which ignores short-term bounces. Okay, now I utilize the RSI and the Shande trend meter for a lot of short-term signals because I look for those short-term signals to coincide with my long-term trend that I'm identifying. Okay, but I allow myself to get shaken out of that position, and I took a $33 hit on my account. Nothing major, but just trying to protect my account. And by not following my setup, I allowed myself to miss over 110% gain. All right, so that's the first mistake I made. So again, closed out the position, moved on. I said I'll trade the next day. I don't want to overtrade. I don't like overtrading, right? So coming into today, all right, this morning, April 8th, I'm like, hey, the market is going to have a short-term rally back up to this 275. It's going to test that 275 one more time. 30-minute chart trend is slowing down, but I do see the market wanting to retest that 275 one more time before we possibly have a short minor pullback, okay, which I've been talking about all week. All right, so I said I'm going to play this rally to the upside back to 275 and try to make a quick gain on that rally. All right, so at work this morning in the office, can't have my phone in the office, so I run outside, grab my phone, and I'm looking for an entry. All right, I start monitoring the market, and I see my setup work out perfectly right around 11:05 when I ran outside prior to lunch. Okay, so I ran outside, look at my phone, 11:05, I see the perfect setup. All right, now what is that setup? Again, April 8th, 11:05, right here, I see the PMO begin to cross back over, letting me know that this overall short-term trend that we had, this overall short-term pullback we had yesterday, is now slowing down and is beginning to reverse and head back to the upside. Okay. Now, mind you, it's crossing over its short-term average, and I know we need to get over the long-term average, which a lot of the times I see the PMO get rejected by that long-term average. But I say, hey, I'm gonna take an early entry, and I'm gonna play this ride back up to the top right at 275. See if we can get a double top rejection, and then finally get the pullback that I'm waiting for on the 30-minute chart, because you can see the PMO beginning to slow down, just like it did back here late March, going into that major drop right here and then crossing back up and gaining momentum. You can see it's beginning to slow down again. So I'm expecting to pull back here before the rally continues on the 2-hour chart. Okay. So I make my entry. 11:05. I buy 2 weeks out. I buy April 24th. $300 calls at 36 cents. I buy 51 of them. Okay. Take another small position. Right here, 11:05, right before the breakout happened. I see, my PMO is crossing, showing me that the long-term trend is beginning to reverse. I see that my RSI is now above its averages and trending, and I see that the Shande trend meter has already broken above its short-term and long-term average along with the RSI. Again, remember, those give me early signals. Okay. Not only were we coming out of this downtrend, we broke back above that middle Bollinger Band, which I talk about all the time. Okay. So seeing all these different things, 11:05, I make my entry. $300 calls on the SPY, 36 cents. Okay. I know it's a solid entry. I follow my trade signal. I'm comfortable with it. There's no need for me to monitor it. Mind you, I'm at work. Put my phone up. I go back in the office. All right. We got a TV. I'm watching the news. I'm looking at the, SPY averaging right around 270. I know I got in right around 267 to 268, so I know I'm good. All right. Again, market is moving up. I go check out the TV just to see what the S&P is averaging. I know it was averaging right around 271 at the time I was looking. Then I checked again, it was right around 272. So I'm like, hey, we good. So I go and I look again and I see that the SPY is at 270 now. So now I'm like, man, what's going on? Let me run outside, go check my setup. So I go grab my cell phone, look at my cell phone. I see that the PMO has crossed over right here in this area, right? And as it crossed over, it's reflecting the price action pulling back. All right. Now, same thing that happened here. You get this small run up, and the PMO is still below its short-term average, which, again, like I told you, I smoothed the PMO all the way out to ignore these small moves. And it continues downward. All right. Same thing here. PMO gets a slight cross to reflect this pullback, but again, it hits the short-term average and it holds above it, and it continues to trend up. Okay. Guess what I did when that happened? All right. That pullback happened right around mid 1 o'clock going into 2 o'clock. All right. I bought those at 36 cents right at 138, 1 o'clock, which I just showed you on the chart. I closed that position out at 37 cents. Got in at 36 cents, closed the position out at 37 cents. All right. Immediately when I closed the position out, right, and again I should have followed my setup, right, because the PMO ignores all those small moves and it maintains the overall trend for me. As I close it out, it immediately hits the short-term average and it continues to trend upward, with me once again faking myself out of my own position. Okay, so those 36 cent calls that I bought, $300 calls I bought with a 300 strike price calls I bought. I'm looking at it now, they're worth 59 cents. Right? So I literally just, again, taking a penny gain on that, right? I literally just missed out on another huge play because I'm not following my setup, right? I know the 30-minute time frame is slowing down and it needs to pull back, and I know this 275 is holding as a strong resistance right in this area based off the weekly setup, and I know that sometime towards the end of this week we may pull back, right? If we do break through that 275, then that sets up the weekly chart perfectly to attempt that 300 that 301 weekly resistance, which is why I bought 300 strike price calls with 2 weeks out on SPY. But again, I allowed myself to get shaken out of my position. And now those calls that I bought, that I sold at 37 cents, that I got in at 36 cents, they're worth 59 cents. And they're still going up, right? So this is why it's important for you to have a trade set up. Follow that trade setup. And don't second guess yourself, right? All the noise that the market creates, if you have a decent trade setup that gives you a good win ratio of 50% or higher, then you're good to go, right? All the noise the market makes, you can ignore the noise because you can just simply pay attention to your trade setup and monitor when money is coming in and out of the market each and every time. Okay. And that's what I've done. I've shaken myself out of my own positions on 2 different occasions. And as you can see here, I closed out down here, 36 cent calls that I bought for 37 cents. So once again, protect my account. And you can see here the trade setup is still intact. And now we're pushing 274, and we're probably going to push that, reattempt that 275 prior to market close. And I'm looking at these calls that I bought, and they're now worth 60 cents. Right. So we get a strong push towards the end of the day. I could have probably got 100% return, closed out my position, and then kind of prepared for the pullback going into the rest of the week with a little over 180 to 200% return on my account. All right. So it's imperative that you have a trade set up, follow that trade setup, trust that trade setup, and then allow your trades to play out per your setup each and every time. Okay. But again, I just want you all to learn from me. If you don't have a trade set up, then you're just jumping in the market to jump in the market, and you will get burnt every single time. So do have a trade set up and follow that trade setup. I've allowed myself to miss out on some pretty big moves here lately. Same thing with Uber last week. And I explained that in my last video. Again, 30-minute time frame was slowing down last week, right around the 27th to the 30th. Same thing, follow my PMO strategy. I took puts on Uber right here, right around that $28 range. Finally got the drop on Uber when it dropped all the way down from 28 down to 21. I think I was up a little over 200% on that trade on the 3rd of April, which was Friday. Something that told me to close it. Not something told me, but my setup told me to close out that trade, because on Friday, the 3rd of April, if I go back 5 days on the 5-minute chart, I began noticing the PMO trending upwards on the 3rd of April like this, and then breaking above its averages. And then not only that, the price action breaking out and holding above its middle Bollinger Band and beginning to trend up. And then it broke out like this prior to the close on Friday, along with the PMO trending up, showing me that that reversal was beginning to reverse, right? Because one, we was oversold on the 30-minute chart, oversold on the 5-minute chart, and I knew we needed to reverse to get a short-term uptrend on that. And I began seeing that happen. And instead of closing out my trade on Friday, again, following my setup where I was up over a little over 200%, I said I'm going to hold going into Monday. I close out on Monday once, I get the small run up. And then come Monday, instead of getting a nice small, take your time run up, I get a huge gap up and a run up like this. And then immediately all my profits I was up on depleted, and I had to close out the position, right? So literally my past 3 trades, again, I've lost over, not lost, but I missed out on over 200 to 300% return. All right. So what we're going to do, we're going to get better. We're going to continue to follow our signals going in, because it provides great entries, and we're going to make sure we follow those signals exiting and going out of the trade. So that way we can maximize our profit and continue to snowball and grow this account. All right. But TTM trades next time. I just want to talk about my past 3 trading mistakes on following my trade setup going in, but not following my trade setup coming out, and how I've missed over a 300% return on the account, second guessing my own trade setup that I've been working on for so long. So again, TTM Trades, the Discord is down below. You got questions, please hit me up in the Discord. Till next time, I appreciate you all, and let's continue making money and protecting our accounts.
Houston, Tranquility Base here. The Eagle has landed.